FICO. It's a company that provides reports that are used to rate consumers' personal credit history. FICO typically fares well when credit is booming, but with a double-dip recession potentially on the cards, what's the outlook like? Well, let's hear from Mark Greene. Mark, you were nodding your head when we were talking there about the situation with Americans using their credit cards. It doesn't sound like the deleveraging that we've been hearing about. Obviously, they're squeezed, and they're having to turn to the plastic.
Well, they are. Actually, it varies across the different types of products that consumers borrow. Consumers have done actually a pretty good job of paying down a lot of the different debts they have, and they're feeling better about their balance sheets. They're worried about one particular form of borrowing, though, and that is the mortgage. Their houses are typically underwater, and they're very worried about employment stability and the things you were talking about in the Obama package. So as a result, what are they relying on? They're really relying on their credit card as sort of the strength. That's the chief asset that they look to. And they've been pretty good about paying down the balances, and now they're starting to feel tentatively that the economy is recovering, and they're starting to begin using the cards again.
And now what happens if we slip into a mild recession in the U.S.?
Well, that could be a problem. And in fact, what people are beginning to do is they're positioning their credit card ahead of other products that they're worrying about. So typically you'd feel the primary obligation to pay off your mortgage first.
Right.
Nowadays, people are saying, you know, the credit card is the thing I'm really going to need if times get tough, if we have that double dip. So they're really paying attention to their credit card first and foremost.
The motivation to pay that mortgage, we know, goes down when you're in a position of negative equity.
Correct.
And there doesn't seem to be many signs that the U.S. housing market is improving. When do you expect to see it?
No, in fact, we see another 12 to 18 months before we've seen the worst of the foreclosure and delinquency problem, especially in the U.S. And I don't think the U.K. is too different, by the way. I think we have similar kinds of problems to work through in the housing industry here.
Let's just go back to what you guys do for a second. I'm very familiar with the term FICO score because I'm American. And basically, if you want to get anything from a mobile phone to a mortgage to a credit card, people are looking at this score. That is your credit worthiness.
Right. It's a number that tells the bank something about how reliably you've paid off your past obligations, and therefore whether you're going to be a good creditor in the future.
So as banks have become more risk averse, has this become much more important to them than it ever was, would you say?
Part of why particularly American banks have begun to recover is they've raised their lending standards. They've become more stringent in their originations, and part of that is they're looking for higher FICO scores. So what used to qualify you for a preferred mortgage or preferred car loan no longer does. You have to have a FICO score higher than it might have been in the past.
Now, this is one of the reasons that the politicians are frustrated, because banks aren't lending enough to consumers. And there's a bit of an argument going on because banks say, well, the demand isn't there.
That's
and
right.
Consumers say, well, if you charged me a little bit less for the loan and you'd give it to me, then I'd borrow.
Absolutely right. We do surveys of risk managers both in the States and here in the UK, and we find the same kind of thing, this sort of credit gap that you're referring to, where on the one hand, consumers are looking for a little bit more credit than the banks are providing. On the other hand, the banks are sort of not motivated to provide that credit because they're being asked to build out their balance sheets and sort of have regulatory capital and comply with all these regulations. So there's a little bit of a gap here. The gap is somewhat acute for consumers. It's particularly acute for small businesses. Small businesses would like to borrow more than banks are willing to lend right now.
So what's the answer? How do you narrow that gap? How do you close it?
I think a lot of it has to do with sort of providing uncertainty, addressing the uncertainty in the marketplace, providing clarity around the regulatory climate going forward, making the banks feel good that they're going to be able to lend without getting in trouble with the regulators in the future.
And perhaps a bit of time as well for people to continue deleveraging.
Exactly right.
Now, as far as your business is concerned, are you guys, you mentioned some expansion plans.
Yes.
This is obviously a tool that you think will be useful for other countries.
We've been a global company for many years. We provide a range of software products and advisory capabilities for our clients around the world. What we're bringing to the UK market these days is the very scores that we were just talking about. These FICO scores have been sort of the benchmark for credit lending practices in the US for many years. We now have a partnership with Equifax here in the UK to bring the same scores to this marketplace.
What are the factors that you put into play here when you're determining someone's FICO score?
FICO scores are computed based on really 5 things. Have you paid off your bills? How long have you had various kinds of credit? How many different types of credit have you had? How much of the credit that you have available to you are utilizing, and any sort of derogatory factors on your report?
So what do you do to improve that score as a consumer? Pay
your bills on time. Don't take out credit that you don't need, and don't cancel cards prematurely. If you have a card that you don't happen to be using, you can keep it in effect.
So if you think, I'm gonna rip up all my credit cards, stop using them, that's actually not a good thing
not a
for
good
your
thing,
credit worthiness.
because then we no longer have any sort of indications whether you're going to be reliable.
That sounds like a green light for me to open up credit cards all over the world.
There you go, Lindsay.
Mark Greene, thanks very much.
Thank you.